I think right now it's it's more just looking at a lot of opportunities and seeing what makes sense and where I could create the most value and where I could build platform value as well. I ended up running origination for Society Generale. That was in purely in the CMBS space. I'd done a small stint before that with Annaly Capital Management doing debt and equity. We always try to somehow connect the events with Italian heritage and real estate somehow.
Yeah.
So
What kind of things you put together?
we've done like Italian wine tasting.
Nice.
We've combined that with having it in a penthouse of a condo project. That's
Yeah.
one of our developer friends did.
Right.
We've done so many over the years.
People ask me all the time, why is getting a job harder than my actual job? Then I tell them, imagine being a recruiter. I wasn't always in executive search. I was an engineer, a broker, and then cold called my way to being an investor. And as I networked with my peers in the industry, I found their stories to be fascinating. It's the people that make the industry special to me, and that's where I put my focus, the talent and the stories behind them. It's an honor to work with the elite executives, and I wanted to create a platform to put their stories on display for the world. Welcome to the Investment Committee.
It is my pleasure to introduce Gary Romaniello. He is the managing principal of GRA Equities, an investment and development firm with expertise in capital allocation, construction, and asset management across ground-up and value-add opportunities. Gary has held prominent commercial real estate roles across Societe Generale, Annaly Capital, Merrill Lynch, and JP Morgan before starting GRA. He is also the founder of American Immobiliare, a nonprofit whose mission is to promote Italian-American culture, heritage, and support the mentorship of the next generation of commercial real estate professionals. Gary, welcome to the Investment Committee.
Thanks, Tom. Thanks for having me.
Happy to have you. So,
it's American Immobiliare.
Immobiliare.
We'll make you Italian by the end of the interview.
Gotcha. Apologies. Thank you for that. So, Gary, tell us about your journey and how you became the founder of GRA Equities.
Sure. I'll start from college. I went to school in the late 80s up in New Hampshire to a small college, Plymouth State University. I went up there for wrestling. And when I graduated, undergrad was in 1990. It was during the heat of the S&L crisis.
Right.
So from a banking and real estate perspective, from an economy perspective, it was tough.
Right.
To find a job. I had a double major as an undergrad, and I wanted to go into the rage was then corporate fitness, like working for like a Blue Cross Blue Shield or that sort of health organizations. And I did get an offer in that space, and it paid very little. And I decided to go back and get an MBA right away. So went back, got an MBA also in that region in New Hampshire. And when I graduated, it was still tough out there. My first job I applied to out of like a little ad in the paper and was lucky enough to get a job with Transamerica, the life company. Was pretty broke when that happened. My car was falling apart, but they said go pick your company car, which was kind of cool.
Okay.
It was great.
Helped you out a bit.
Yeah. So I was with them for a year or so, and they moved my position to Connecticut. I liked the Boston area, and a buddy of mine from grad school was running a residential workout group in the mortgage space, which I was like, is that corporate fitness? I don't know. But he's like, no, come here. We've got all these delinquent loans. We're working through them. I think you'd be good at it. And it was pretty fun. But like 4 months into it, it failed, the institution. So the big employers then were the entities that took over the FDIC assets. It was a group called Recall Management in the Boston area and Bank One Capital in kind of the New Hampshire area. I ended up getting offers from both, taking a job with Bank One Capital. It was kind of a great experience to enter real estate in that because it was all workout oriented. Yeah, we would have to present both written and orally our recommendations to our investment committee and an FDIC oversight committee, and just learned a lot about negotiating. I mean, you're sitting across a conference table with people that are, it's their livelihood, it's their business, and it was real estate loans, business loans. But we worked through that portfolio fairly quickly.
Right.
The company was based in Dallas, and they asked me if I wanted to go down there and work in an asset management group, which I did. Um, and from there, we started a conduit lending operation, but it was in Houston. So I jumped to Houston, and we had two main relationships we were funding with, Lehman and JP Morgan. And I just hit it off with the Lehman Group, and we did a lot of business. And I was fortunate enough, they offered me a job in New York. So
Lots of Lehman alumni from the real estate group.
exactly.
That are still like active today. So yeah, I hear
Exactly.
a lot of good things about the culture of that Lehman real estate group.
Yeah, and that's kind of, I wasn't there a ton of time,
Mm.
but that's kind of who I identify with as my core group from when I started, when I
Gotcha.
came back up here. Um, went through some ups and downs there. The long-term capital crisis was
Yeah.
going on when I was there,
Right.
and but I liked it there. Ultimately, the other group I was working with when I was in Texas, JP Morgan, they were ramping up. So they made me an offer. I went over there, uh, did a 5-year stint there. From there, I went to Merrill Lynch. It seemed like it was always 5-year stints in the business. Then I don't know. You're a recruiter. I don't know what it's like now. Um, it was like 5 years. You're kind of, you've got to kind of readjust the title, the salary.
Yeah, the cycles change, and then but
Yeah,
yeah.
yeah. So ultimately, in that space, I ended up running origination for Society Generale. That was in purely in the CMBS space. I'd done a small stint before that with Annaly Capital Management doing debt and equity. And all along the way, when I made it back to what this was kind of my home area, I grew up in Connecticut. I started buying and developing smaller assets, 20 units. I did some smaller industrial
Side projects while you
side projects, yeah, and loved it. Loved it, but couldn't go too far with it. I had a full-time job, um, and then at, at Societe Generale, there, I came to a point. I was there just about 2 years, and I had invested in an assemblage, a development assemblage in Bayonne, New Jersey, that we were ready to bring in a partner and put together the capital stack. And I had also was chasing a bigger value add, a multifamily asset in Danbury, Connecticut that a REIT was selling,
Okay.
and I got it.
Nice.
I put it under contract, and for me it was like a $52 million purchase. It was big at the time. So, I said, I think the main impetus for me was, there was I wasn't creating wealth in my day job. I
Right.
was getting paid well.
Yeah.
And I had experienced some success in development. So I figured if I don't go on my own now, when am I going to do it? So I took the leap. That's when I took the leap.
Right. Right. And what gave you, I guess, the confidence to take that leap? It's always tough. People change is hard.
Yeah.
Change is scary,
Yeah.
right? We're accustomed to having, if we're an employee, we've had the corporate structure, the corporate backing for a long time, but going out on your own and, you're responsible for everything now. Your own insurance, your own retirement, you're starting a payroll. So like that jump, like what was sort of going through your mind at that time?
It's scary, right? Because, all of a sudden the coffers aren't getting filled necessarily every year. And
Yeah.
you learn little things as a small business entrepreneur. You mentioned like healthcare insurance. I had no idea, if you and I start a company together, we're partners, and we don't have a third employee that's not a partner, we can't get each other health insurance.
Right.
I had no idea,
Yeah,
so
you just
like
learn these little things.
you learn
Yeah,
these little
you
things.
become a generalist.
Yeah,
Yeah.
yeah.
Kind of.
So, and to be honest, that's what I always liked about the development process was the challenges that came up, and you know, working your way through them, but there was a lot of that certainly in the beginning. So challenges like health insurance. I ended up going on a company board in exchange for insurance, things
Yeah.
like that.
Yeah.
But I poured all my effort into uh, the New Jersey development project, put the capital stack together, brought in an LP, a family office, put the construction loan together, and we closed and started to build that. The property I was under contract on, I had been introduced to a co-GP partner for that.
Okay.
The deal never closed. It was more rate sensitive, and they took it off the market. Interest
And
rates
when
had.
was this?
This was 17. Yeah, probably 2017.
Okay.
So the 10-year had jacked, and I needed a price concession, and they said, "Look, we're just going to hold it off the market for now."
Okay.
But the prospective JV partner that I had as a co-GP said, "Look, my team liked working with you on the diligence. We have a portfolio of 1,200 units in Texas and Florida that we have a CMBS loan maturing. My partner is a European group that went defunct. They haven't been making capital calls. There's a lot of deferred maintenance. Why don't you come in, help me recapitalize it, and you can oversee the renovations and stuff. My firm will property manage. You can asset and construction manage."
Okay.
Yeah, and we did. We were able to I was able to put a new capital stack together, and we were up to the races, and that was just fun and a
Right.
lot of learning, a lot of traveling. But
Right. Down in Texas, right? You said.
yeah, Texas, Florida. The Florida stuff was the bulk of the NOI. It was in Orlando and Fort Lauderdale,
Okay.
but the Texas assets were tertiary, like Abilene and Amarillo. So it was challenging to
Yeah.
travel there, but
Yeah.
great experience. And at that point, and I love that value add business.
Yeah.
I think we talked about it a little bit before. I'm like, you know what? I'm going to raise a fund around this.
Mhm.
I'm going to pursue this, but so quickly, those assets in the marketplace got priced to perfection.
Yeah.
So
Because that's where a lot of the institutions wanted to play.
Right.
Value add multifamily, mixed use. So it became, and the brokerage community definitely took advantage of that. Like they knew that they could get people that didn't really understand the valuation and
Right.
and make a sale. So you really had to really find some off market or some funky fractured condo stuff in there as
Right.
well to like really get a bargain
to get
for
some
it.
juice out of it.
Yeah.
Yeah. Yeah. It was. But from a starting off on your own, it generates so much fee. It's not an empty building. You're not doing ground up.
Yeah.
There's cash flow, right?
Yeah,
There's
from day one,
fees
they
that
said.
you're pulling down from the loan as a sponsor. So it was a good business from that perspective. But so anyway, that portfolio we ended up selling off the Florida assets and still have an ownership in the Texas assets.
Okay.
And the New Jersey.
Yeah, the
Yeah.
development,
Yeah, we built a mid-rise in Bayonne, New Jersey, mixed use, ground floor retail, and 91 units above rental.
Is that where you have the Americano?
Americano,
Nice, yeah.
the restaurant.
I gotta go.
You have to come there.
Yeah. I heard it's good. Yeah, my buddy lives in Bayonne, so he said, yeah.
Oh, that's right. You told me that.
Yeah.
Yeah.
He said he heard of that place. Heard it's good stuff. So
Yeah.
I'll definitely check that out. Check that out, Americano in Bayonne for sure. So what were, especially in the firm's early years and as you continue to move on, capital markets have changed.
Yep.
Interest rates spiked up, slowly coming back down with the Fed's decisions. Office is having its moment. Retail had its moment. Surely, when you started out.
Yeah.
What are the critical decisions that you're making right now in order to move forward in these markets, especially as you look to 2025?
I think on the real estate side, it's I think the challenge for me as a smaller player, well, you're always looking at risk adjusted returns, and risk relates to more than returns, right? It's if it's development, are you signing carve outs? Are you signing recourse, completion guarantees? And a lot of that depends on the partnership you put together. So um, as I move forward in the past couple of years, I set up my platform on the real estate side. I kept the development in my backyard in the tri-state area,
Okay.
and would be fine doing value add anywhere, Texas, Florida, any market that made sense from a thesis basis. Although I would like it to be a non-connecting flight away going forward.
Right.
But
Right.
but I was never able. I was circling New York and the boroughs, and I just couldn't wrap my head around prices, the process, going hard at PSA, doing all your diligence up front. I was like, how am I ever going to do a New York deal? But in the last couple of years, um, it's softened here, especially in certain asset classes. So um, I was able to assemble a site, a corner with some partners in Tribeca, where I live. And we have fully approved a condo project, ground floor retail, with floor through lofts and a penthouse. And I had sold an asset and was looking to do an exchange. My same JV partner on the Tribeca deal asked me to look at. They had sold. They had a big gain. They were trying to exchange, and they said, "Will you help us look at this office building in Brooklyn? We're trying to beat it up. It's office, but it just we like it." And I liked it too. And I said, "Look, I have a gain I'm trying to place." So we, as a tenants in common, we bought that building. So I've done my first two New York deals in the past couple of years. So maybe going forward, that's we're looking at some other opportunities.
Yeah, what's the plan for the office building? That was 57.
57 Willoughby.
Willoughby.
Yeah. It's unique for me since I've been on my own, which has been about 8 years. Every time I close on something, now there's a lot of work to do, right? It's a value add or you're building it, and so this was a very reputable owner, had redeveloped it, pretty much got renovated it, re-tenanted it. Unfortunately, they went over budget, and there was pressure to sell. So there's nothing to do to it really, except keep the tenants happy.
Okay, so it's fully occupied right now?
Fully occupied. The WALT on it is a little over 12 years. I mean, I think the challenge when we bought it was that there weren't a lot of portfolio lenders out there for debt. So we did a CMBS deal, and it went very well. So it ended up being a good basis. We bought it sub 400 a foot, pretty much on a 9 cap. So not a lot to do to it. It's a little bit weird month one to start making distributions.
Right,
Weird feeling.
Yeah,
right.
that is ready for that.
Yeah.
And it's interesting because you said, this deal you're doing with partners, a lot of deals especially this is more of a core plus deal.
Right.
So there's cash flow day one. How do you build trust with business partners, investors, especially as up and coming, going on your own, and sort of like building these relationships to do business with?
Yeah, I think in the beginning it was the investor base was more friends and family, so that rapport was already there. As the assets got bigger, especially when we developed the Bayonne deal and we had to bring in a family office. Yeah, there's a lot of dog and pony, but ultimately, hopefully, when you get down in the trenches, I mean, every development deal like that deal, we had approvals, and then we had a community group sue us, right? So that slowed us down.
Oh, wow.
You get involved in that, and as you work through all these issues that come up, and you work through them as a team, you get a report. But it's so important, especially when you're talking about co-GP, JV partners. You don't know. You do your best due diligence, but having a great, I mean, it's probably just as important as your personal relationships. It's because you're living with that relationship for a long time.
For a long time, yeah.
Yeah.
For the life,
Yeah.
that ownership,
Yeah.
of that property.
Yeah.
And is the phone ringing constantly now from brokers now that you bought an office building in Brooklyn?
It's starting to wane off, but you're right. Initially, they're like emails, phone calls, yeah.
Right.
Yeah.
Yeah. I mean, it's that hit big news, right? So, but different to the story that's going on with other offices, right? That was sort of a unique asset, where that the work was already done, and they sold it to you guys. But there's a lot of B B, C product out there that's
Right.
suffering, especially in like secondary markets. I consider probably Brooklyn a secondary market to Manhattan.
Right.
So, but whether it's a Philadelphia, whether it's just other just sort of secondary cities, the older office properties in secondary cities it's been a tough
Been
point.
tough.
Yeah,
And as you know, right, there's been so much capital raised around the conversion business plan, but
not
you
everybody's
know,
gonna get converted.
yeah,
Yeah, yeah,
it's not always an easy task to
right, right.
convert some of these buildings. Yeah.
Yeah, yeah. Especially in the city, especially with tight zoning.
Yeah.
It's not these floor plans are messy. I mean, it's been a conversation for the past 2 years.
I've only looked at the high level stuff I've read on the City of Yes that got approved, but
Mhm,
I guess, it's probably worth digging deeper into. And
mhm,
there really needs to be a lot of tax abatement that goes along with this too,
mhm.
to make a lot of these projects work.
Yeah, to make it feasible. If there
Yeah.
was proper tax bill, is that something you think you would get into?
Sure.
Yeah,
Sure. Yeah.
interesting. Um, and how would you? I know you talked about you started to do some developments in New York. And open to other cities. What's, I guess, the investment philosophy moving forward, um, as as you think about not only on the development side, but maybe just acquisitions, like you just bought a core property. Is that, do you get sort of the cash flow bug now, and looking to make more core acquisitions? What's the mindset right now?
When I first started off, I wanted to be very myopic, and I'm like, I need to pick a thesis and a product type and really and raise capital around it.
Hmm.
I think right now, it's it's more just looking at a lot of opportunities and seeing what makes sense, and where I could create the most value and where I could build platform value as well, and just be open-minded right now. I mean, I haven't it look, a lot of people thought there would be a lot more distress
Yeah.
right now, and I've looked at some
Yeah.
distress deals.
I mean, there's a lot of lend and extend, right?
There's a lot of lend and
Yeah, yeah,
extend.
yeah.
Yeah,
Survive till 25. So they didn't. There was supposed to be distress. We're sort
yeah,
of holding back the distress for as long as we can. But
yeah,
if with it's a sort of a natural. We're not letting it happen. We don't want
yeah,
to let it happen. Yeah, we want to hold it onto our books for as long as possible.
yeah.
So yeah, it's been going on.
So yeah, I mean, look, if I can find covered land plays, things that make sense where I could add value for the development pipeline, yeah, it makes sense. But I don't, just want to be mindful of basis and the normal blocking and tackling.
Gotcha.
Yeah,
And as you've been through the process now, going on, 7, 8 years
8 years.
now.
Yeah.
Yeah, congrats. Has there been any mentors along the way that you've utilized, people that you've reached out to help you on your journey, maybe other entrepreneurs as well that have started something, that's sort of giving you advice in growing the business?
Yeah, so many that were both on the institutional side as bosses and also clients.
Hmm.
A lot of my debt clients um, from that I've lent to and had long-term relationships were so supportive and actually offered a joint venture on stuff. I
Hmm.
mean, I was really surprised and happy about that and proud of it. Yeah.
Yeah, yeah.
And on the institutional side, I think from my early days, you know, uh, uh, I was on origination and mostly CMBS in the beginning, but I really had some mentors on that side that kind of emphasize. They really showed you how to maximize relationships and keep relationships, and that's all it was about at the end of the day.
Right.
Not all it was about, but a lot of it.
But they're very
Yeah,
important. Just
yeah,
relationships, how important relationships are.
yeah.
And speak to that because I recruit for and speak to a lot of students that want to get into commercial real estate.
Right,
And everyone loves acquisitions. Everybody wants to be on the equity side, and so
right,
that's sort of the holy grail, right? But you came up to the debt side,
right.
and then didn't necessarily start a debt fund. You're in development. You're deep in the equity stack. So I tell people, like, you could go on, there's different paths, and you
Sure.
could still go and start your own business,
Right.
owning the real estate.
Yeah.
So how did that transition going from originating debt and then translate into onto the development side, because you know it all comes together, like you know the negotiation, understanding different areas, like all comes together. So I like that you're an example of someone that came from that side, started their own equity business.
Yeah, look, you know, everybody that y- real estate, especially development, is challenging, and it comes at you from all different angles, and different sponsors have their different strengths. So mine was clearly putting the capital stack together and
Mhm.
understanding the debt. But along the way, you know, I did cut my teeth on some smaller projects, and one I did in particular, you know, I counted on a partner to be on the GC side, and it was during the Great Recession, and
Wow.
you know, we just got caught there, had a lot of overruns. I had to really step in and take an active role, and you know, that also caused me, you know, I'm like, I'm not going to be blindsided on the construction side anymore. And I went back to school part-time, obviously. I went through Columbia's construction administration program, got a
Okay.
master's degree there.
Shout out to
You know, not that
Columbia.
it's the be all end all, but at least it gave me a little more understanding, and it gave me this whole new network of people.
Right.
Um, so I think you do the best you can to know enough about each aspect of it.
Right.
You know, I'm not an architect, but I've learned a lot about design.
Exactly.
I'm not an engineer, but I've learned a lot on that side. So, um, and then you try to put my smaller deals, you know, I might not have partners, but on the bigger deals, you try to put together a group that complements each other.
Right.
Yeah.
Skills complement each other. Right.
Yeah, and you let um, you know, usually I'm putting the capital stack together, but you know, some deals I might property manage, some deals my partner's better at that, and I'll asset manage. So,
Mhm.
you know, you try to be malleable.
Gotcha. And speaking of bringing skill sets together, when it comes to human capital, you know, if you were looking to you know, add talent onto to GRA and bring in members, what qualities, you know, would you be looking for? What intangibles stick out for you as the people that you'd want, you know, on your team?
Look, I mean, obviously, you know, academic background and that is important, but real estate's kind of a hand-on thing. So I would say the top two attributes, probably in this order, are number one, work ethic.
Mm.
And I'd say number two, a close second, is communication skills. And I find, you know, that can uh, trickle down into simple as, you know, communicating properly on an email and
Hmm.
not dropping people off an email chain. And
Right.
it's surprising these days how somehow that gets lost.
Mm.
Little things like that.
Right.
But work ethic would be
Yeah.
top.
Yeah. They have to show that.
Yeah.
I think that's a lot of times that's driven by simply how much they love the business.
Yeah.
Right. Like
Yeah.
you have to truly enjoy, especially development. I feel as though like the development community, it's a passion.
Yeah.
Like because it's a long drawn out process
Sure.
to go from, you know, dirt to the sky.
Yep.
So if you don't have the patience, the grit, the perseverance to work, and to your point, you have to work with multiple. You have to work with the state. You have to work with the developers. You have to work
Right.
architect. You have to know a little bit about enough
Right.
to really get it through. So yeah, whenever I talk to development folks, it's like they all it's their baby. It's their, you know, they've been with this project for sometimes over 10 years if it's ensemblage. So it's I could see that
Yeah.
for sure. And what have you learned about yourself as a leader, not only when you were in the institutional side, but now at GRA and going through this business?
Well, from a leadership perspective, I think it's important to practice what you know, I'm saying work ethic is
Mm-hmm.
important to me. Well, I have to have a good work ethic, and I have to
Mm-hmm.
model that, right?
Mm-hmm.
Both with employees and partners, all throughout that process. So, um, and then I guess I learned in you know, in the later stage of my institutional career, um, you know, being more in a managerial role and doing that now to a lesser extent, I really do enjoy whatever knowledge I've gained over my career, like imparting it onto the next generation.
Right.
And you know, just if there's anything I could do, like don't do this the hard, you know, just give them a corners to cut, like not do things the hard way, not corners to cut, that's the wrong, but just like what I learned and, if it could be helpful.
Right, right. And to the managing directors that are out there sitting at their desks, thinking about going out on their own, thinking
Yeah.
about starting their own business or putting family and friends money together and growing up grassroots, what advice would you give to them?
Well, it might sound corny, but whatever you're doing, whether it's development or you're starting your own debt-oriented platform, make sure that's your passion and you like it.
Right.
We all sometimes we end up in these roles in institutions and take that path. It brings us, and it can be lucrative, and you start not to love it. So make sure it's something that you love and you feel passionate about, and then do your due diligence. Watch recourse, watch those things in the beginning, because sometimes you're so anxious to do your first deal or put together, that you're like, I just got to get it done. I've been doing this a year, I haven't gotten paid, whatever, I'll do
Right,
whatever. Just be careful, right?
right,
Because
right.
it can go sideways
Yes, yes.
pretty quick, and you never know what market you're going to be delivering into.
Yeah, the patience.
Yeah.
Yeah, it's very hard to have patience. Switching gears to the nonprofit. So,
Yeah.
American,
Immobiliare.
yeah, there we go.
Yeah.
I'll brush up on my Italian. So tell us about it. Tell us about, when you started it, how did it come to be, and, and the overall mission.
Yeah, I mean, I think back to that concept of learning how I like to help the next generation.
Hmm.
I think that was born out of when I was still working. We might have been at an ICSC or something, or a
Okay.
conference in Vegas,
Okay.
and
Good
there,
conference, by the way.
yeah,
Yeah,
good conference.
yeah.
And maybe there were 6 or 7 of us, maybe the only Italians in the business. I don't know. We were hanging out, and we
Yeah.
were talking about how other ethnic groups, you know, do such a good job of helping to mentor the next generation, and on the finance side, on the development side, um, and we were like, why don't Italians do that? Like, why don't they
Hmm.
So that was kind of born out of it, and then we formed this organization. The primary goal is to raise money to give out scholarships to young Italian American men and women that are pursuing full-time degrees in commercial real estate or related fields. So it could be ancillary, it could be law, real estate law, it could be engineering, architecture.
Mm.
And we've been in existence since, I think, 16, and we've given out about 150,000 in scholarships.
Wow.
And uh, just as important, we place them in internships,
Yeah.
and
That's the
we,
key
we
to
assign mentors.
get some job experience. Yeah,
Exactly.
to make a
So,
difference, right?
yeah, so what we're really proud of is when we could take somebody that doesn't necessarily have those contacts through their parents, or,
Networking is huge.
yeah,
Yeah,
and all of a sudden they get an internship at a firm that they would have never, it could change the trajectory of their career.
completely.
Yeah.
Completely. Life
Yeah.
changing.
Yeah.
And that's why I say, like, there are opportunities out here if you find them. And like your organization, like that's the key to it. The more organizations that are like this, the better off kids that would have never, don't even know that it exists, to be able to have a completely different life trajectory. That's part of why I started content, to show students, to show kids, to show people that don't know these careers exist, that um, people have many different ways
Right.
of getting there. And so, but you just have to put in the work, learn about it, and you'll make it. What are the type of events that you guys have and host?
We try to do 2 smaller events, like one in the spring, one in the fall, like cocktail events where it's networking, that sort of thing, and we always try to somehow connect the events with Italian heritage and real estate somehow.
Yeah.
So
What kind of things you put together?
we've done like Italian wine tasting.
Nice.
We've combined that with having it in a penthouse of a condo project. That's
Yeah.
one of our developer friends did.
Right.
We've
Right.
done so many over the years, and then we try to have one um, bigger fundraiser a year where we bring in entertainment and we sell tables, and that's really what refills the coffers for the scholarship. fund. And you know, myself and all our board members were pretty proud of it. You know, we slowed down in COVID from an event standpoint, obviously, because there was a lot of liability there,
Of
but we
course.
never stopped giving out money.
That's amazing.
Yes, and we've given it to, you know, so many schools now that
Yeah.
we've partnered with across the country, not just in the New York area. So yeah, it's been very satisfying.
And I'm happy that I'm able to have you on this show so that you know, broadcast that to everybody, so all the Italians out there can see this and that have an interest in real estate, and you know, reach out to just ask questions,
Yeah.
to come to an event, to talk to people. You know, it might not be for them, but it could very well be for them. That's the entire point. So lightning round.
Okay.
Ready?
Yep.
Got it. Morning person or night owl?
Morning.
It's not like me at all. I can't do morning. I try my best, but it doesn't work out for me. But that's good though. Need that for a developer. Early morning constructions on the site.
Yeah.
What year would you travel to and why?
Well, I'll answer that through kind of a real estate lens. I think
Okay.
it would be like 1950 in there, you
Okay.
know, what post World War II, when the highway system was getting developed and real
Mm.
estate was really forming.
In cities, right?
Yeah, and
Mm.
product types were forming, you
Yeah,
know,
super regional malls.
super
And
regional
yeah,
malls
yeah,
like
right. Yeah,
yeah, and
for sure.
Barlow, right? He was the pioneer, you know,
Exactly.
and that must have been an interesting time from a real estate
True.
perspective and a relatively peaceful time. You
Right.
know,
Yeah. Yeah. You know what I think about in the, like, being a real estate professional, whether it's me, not even as far as 1950, but even like 19 in the 90s, just how unspecialized it was,
Mhm.
and it wasn't institutionalized as yet. So you know, were if you were an investment sales broker, you know, now if you're an investment sales broker, like you would be in like office in
Right,
Manhattan,
right.
right? But before you were just investment sales broker,
Generalist, yeah,
generalist,
yeah,
all property types, different regions,
yeah,
and I think, and so those are the sort of elder statesmen now. So there's so much knowledge from those guys that
right,
like grew up in those times, just because they saw so many different areas where like now there's so much specialists that have no clue about, you know, the uh, the verticals
right,
that are just next to them.
right,
So like, you know, an investment sales guy might not know much about in the leasing market. Like they'll know a little bit, but not to the extent as which when you're okay, I could do a leasing deal here, I could do an investment sales deal here, or
right,
even the development guys. Like there just might have been more like you were a developer for a region in a different way
right.
than it is now, because now it's like there's so much more competition
So much more.
like you have to, like, okay, like if you haven't done, like if you're trying to convince investors and you haven't done X amount of development deals in this area, then no, we'll give the capital to somebody
Right.
else, right? So just so in so many different ways, I think when I talk to professionals that might be retired now,
Right.
it's just a completely different perspective on how they think about property types because of their experience.
Yeah.
Altogether. So it's a good time.
Yeah, a lot of just great entrepreneurs back then that went with their gut and they were smart. And I mean, look, they had tailwinds, but you
Right.
know, but yeah,
For sure. Sure. Most irrational fear, if any.
falling off a ski chairlift.
Oof.
That's always been, I don't know.
Now it is kind of like my
And I like skiing.
my videographer is laughing. Yeah, no, I mean, it's like it could get a little wobbly depending on which. Like I kind of see what you mean. I don't like heights either. So I could relate to that. Any hidden talents?
I mean, it might sound corny, but I think like you said, to be in development, especially or in business for yourself, it's perseverance is like a key attribute.
Mm-hmm. Mm-hmm.
Yeah.
And if you could learn any new skill, what would it be?
Well, I'm always impressed by people who speak one or more languages other than English. I don't even speak English that well, but you know, and my friends and family will attest to this. I've been working on Italian because I just got my citizenship and I have a tutor and everything. But I'm so impressed by people who have that linguistic ability.
So did you through your parents? Do your parents speak Italian? And how did that
It was my
happen?
grandparents, so
Okay.
kind of lost it the next generation down.
Interesting.
Well, it was my great grandparents on my mother's side and my parents on my father's. So
Did they give you hell for that?
it was their fault. They should have learned.
Right, right. And then one meal for the rest of your life.
One meal, I mean, my favorite, I'm Italian, but
Yeah.
my favorite dish is eggplant parmesan. So
Really?
I think I could do it.
Okay.
Yeah.
I can do it. I heard the accent come out there a little bit when I heard the Parmesan. I like that. And proudest moment.
I would say it would go all the way back to, my academic career. Um, when when I was in college, I wasn't the best student the first couple of years, and I hit kind of an epiphany where it was like, okay, uh, the dean of undergraduate studies like, well, maybe you should take a break from wrestling, take a break from academics, take a
Hmm.
semester off, and I cut a deal with her to take calculus, I think it was, over a winter session,
Hmm.
and if I got a certain grade or better, she let me stay in, and from that I did, and from that point forward, you know, um, I was dean's list or president's list, and I went on to get
Wow.
an MBA, and she
Wow.
helped me with get into that, and education's always been important to me
Uh,
since then.
yeah. Yeah. Just like that was the moment.
Yeah, that
That
was
was
one of those forks in the road
the
where,
forks in the road
yeah,
moment.
yeah,
Yeah.
yeah,
Everyone sort of has those. That's
yeah.
nice. Well, Gary, appreciate the time. Thank you so much for your wisdom, your knowledge, and thank you for being on the
Thank
show.
you, Dom. It's a great thing you're doing here.
I appreciate it, man.